Good morning, everyone. Just give me a minute while I pull up a slide presentation. Let's see. Just give me a second. Show. Beginning. All right, we're going to give it another minute while we have a few more people joining. I see the numbers are growing. Thank you all for joining us today. We're just going to give a couple of minutes so a few more people can join us. How about all of my panelists while we're doing this? Actually, just mute yourselves at the very beginning, and then I'll give you the opportunity to unmute in just a few minutes. All right, just give it 1 or 2 more minutes. So good morning, everyone. My name is Anna Siefken. I'm the Executive Director for the Wilton E. Scott Institute for Energy Innovation. I am so glad to see you today. We have an incredible lineup of speakers that are actually here all from the West Coast, it turns out. So it's going to be a very interesting perspective on investing in climate tech startups today. So as I mentioned, I'm Anna Siefken. I like to give my contact information so that if you want to connect with me on LinkedIn or send me a note, this is how you can reach me. But there's also ways that you can reach the Scott Institute. So make sure that you're following us on Twitter, on Facebook, on LinkedIn. And if you have not signed up for our newsletter, which is how many of you probably heard about this webinar, please do make sure that you sign up for our webinar. So what is the Scott Institute? We serve as the research hub for energy, clean tech, and climate tech activities across campus. We're in Pittsburgh, Pennsylvania, and the focus that we have is on strategic partnerships, on entrepreneurship, on education. We have a master's program. We have several master's programs. Collaborative research with our 170 or so faculty members who work specifically in energy. We also do a lot of work in policy outreach and programming like this event this morning. So we have quite a few events coming up in the very near future. On December 16th, we're hosting a webinar on beneficial electrification. We're doing that in partnership with Duquesne Light Company. But we do have Destiny Knock, who is with Carnegie Mellon, Alex Lasky, formerly of O-Power, who's now with Rewiring America, and Kevin Walker, who is the CEO for Duquesne Light. On January 20th, moving into next year already, can't believe it, we have Salim Ali, who is with the University of Delaware, giving a distinguished lecture. January 25th, we're partnering with CMU's Block Center for a decarbonization webinar that's really looking at EVs, electrification, and policy in the transportation sector. On February 17th, we're partnering with Recurrent Ventures on a session. Working title is Innovation and the Regional Economy. And then finally, Energy Week, March 21 through 25, save the date. But if you want to sign up to receive additional information, the website is listed here, cmu.edu/energy-week. So I want to put a special pin in this event that's coming up. You can see that I just mentioned it, but it's from 9 until 12. The virtual component is going to be starting at 9:30. So you can join us for that on December 16th. That will be our last event of the semester. I also want to remind you that during CMU Energy Week, we are hosting the Energy Tech University Prize, the UP Prize. So the first segment of that, there are regional hubs around the country. We are serving as a regional hub, and in February, we'll be doing an event. And then the final pitch competition will be on March 24th during CMU Energy Week. So if you have not heard of the Energy Tech UP Prize, we definitely want to make sure that you register and learn more about that. This is a student-oriented competition. And I also want to mention that NREL is hosting their Industry Growth Forum on April 13 and 14 in Denver. So we always go to the Industry Growth Forum. It's one of the oldest events and opportunities, a fantastic opportunity for startups to connect with investors. As I mentioned, I'm going to say it again, Energy Week is March 21 through 25. Fingers crossed, we are planning on in-person, but I did want to make mention that you should save the date for that. Pre-pandemic, we had hundreds of people in person. We will be having a virtual component for this as well, but being in person is the best way to experience Energy Week, and we're hopeful for that in March. And with that, I am going to stop sharing my slides and switch over to our panelists. Great to see all of you here today. So, in no particular order, we have Paul Straub, who is co-founder and managing director at Wireframe Ventures, where he invests in founders on a mission to improve the health of people and the planet. He led investments for Electriphi, which was acquired by Ford, OpenInvest, which was acquired by JP Morgan, Span.io, Trove.co, LevelTen Energy, MycoWorks, and 5 or 6 others. It's quite a portfolio. Thank you, Paul. So Emily Fritze is a principal at the Wesley Group, which is a venture fund in Menlo Park, California, that invests in energy, mobility, buildings, and industry 4.0. Prior to that, she was director of strategy at Powerhouse Ventures, a clean energy and mobility venture fund in Oakland, where she helped conceive and raise Powerhouse's seed fund and managed their innovation firm. And she's also served as special advisor to ARPA-E and in policy roles for the U.S. Secretary of Energy, Ernie Moniz. Thank you, Emily. Next, we have Shilpi Kumar, who is a partner with Urban US, which is an investment platform focused on urban tech and climate solutions. She specializes in customer development and product strategy for early stage companies with experience as both a consultant and an early employee. So she previously led go-to-market and early sales efforts at Filament, which is a startup focused on deploying secure wireless networks for connected physical assets. She also worked at VTF, First Round Capital, and Village Global. Thank you, Shilpi, for being here. And then finally, last but not least, Matt Egers is an investor with Breakthrough Energy Ventures, which is the $2.8 billion climate tech venture capital fund. So his combined Breakthrough Energy Ventures and angel portfolio includes 25F, Zero Avia, Wigrieve, AeroSeal, Luxwall, Zemergen, Omnidon, Philogen, Energetic Insurance, Faraday Bicycles, and others. So he serves on the board of 75F, Zero Avia, AeroSeal, Luxwall, and Posagen, and is co-founder of Rooted Relationships. So apologies for any of those companies if I misstated your name. Certainly not intended, but I want to get started with our group this morning. So again, thank you all so much for being here. It's a little bit early in California, so I appreciate having you all here with us today. So with that, I want you all to answer this question. In fact, I'll probably send it to one of you first and then have as many of you answer as would like. I really want to understand what are some of the overarching key messages in climate tech investing. So where are we headed? So it's a big open-ended question, but an opportunity for you guys to just dive right in. Tell us a little bit about your organization as well, particularly the kinds of funds that you're investing in. So why don't we start with Paul, and then we'll go to Shilpi, and then we'll round out the group.
Thanks, Anna. And I appreciate the introduction and just a little more color on Wireframe. So we like to be the first investor in a company. That means pre-seed or seed stage investing anywhere between a couple $100,000 up to $1.5 million from us in a first round. And we like to build active, engaged relationships with founders early on as an extension of the team, supporting them through their Series A and then always a partner kind of beyond. Human health and climate are the two primary focus areas. We'll spend time on climate here. I think, just a little background, I was an investor in the first cleantech kind of boom, built a cleantech practice at my prior firm in 2007, 2008. And so what's happening now is really exciting because I think we've moved so far beyond that first generation of innovations and founders who really in some ways laid the groundwork for what's happening now. But I think what's happening now is far broader in terms of the talent that's committing themselves to building companies in this space. In this space, I mean the decarbonization of the global economy, which is quite broad and opens up a lot of opportunities for people to get involved. The capital that's come into the space, and as we think about where we're spending time, a decade ago, I would have said a lot of it was around renewables, buildings and controls, smart grid, those are all interesting areas today. I think we're also looking much more broadly at agriculture, at food, at circularity in the consumer space. Transportation is obviously, you know, a big one. And so I'm sure we'll get into some sub themes. I would just frame it that for us, one of the big things we're excited about and have been very active around is electrification, and not just of passenger transportation, but of all forms of transportation, as well as electrification of buildings and the built environment. And so we aren't overly prescriptive. We like to be founder led in terms of the opportunities that we get involved in, but that's certainly a big overarching area that we're really excited about.
I'll pick up from there. I think the reason Paul and I end up working together so much, our firms work together quite a bit, is because we also like to be active investors, come in at pre-seed, take teams from kind of the earliest phases and put them in a really good position to be raising seed and Series A rounds, kind of getting the product to market in their concept that they have, and proving out the first customer value propositions through pilots, sometimes getting purchase orders. And we work across really similar sectors. I think instead of the health and human systems, we look at urban tech, although I think urban tech is sort of like a false characterization. So it covers some gov tech and civic tech, but also transportation, thinking about waste systems, food systems, how transportation of logistics within cities work. And I think electrification is a huge part of our impact thesis. We also think of densification as a really important driver of climate and climate justice, as the population on the planet exceeds 8 billion, having cities be a part of the resiliency of how human systems exist on the planet sustainably. So I think one thing that our portfolio really reflects is that we're very open to investing in hardware. We're open to kind of core deep technology. We think a lot about distribution and what is the way to actually facilitate post-commercialized technology getting into actual systems where they can make change. And in terms of how we want to work, I think with the other systems at play. So working with where regulatory is playing a policy change, how do we actually expedite some of the actual impact of those drivers into market? And I think that involves like educating corporate and also educating startups on how to work with those systems and find alignment. But yeah, we definitely work with teams from like 1 to 2 people all the way through Series A, Series B. And we also have raised a credit vehicle to support asset based financing and customer contract based financing to support kind of earlier stage debt availability to, in addition to our equity investments. So I think that's been a really big growth area for us, is seeing how much, across all of our teams, there's a need for, lending at an earlier stage.
Matt, you want to go for it?
Sure. Thanks, Emily. I'll jump in. Great to be on the panel with you guys. Great and terrific group here. So I'm an investor at Breakthrough Energy Ventures. We are investing out of our Fund 2, which is a little over $1 billion. We're a climate tech venture capital firm seeking venture returns and investments and massive impact on greenhouse gas emissions, which we define as the potential for 0.5 gigaton of annual impact from each company if they're successful and capture their whole market. We're early stage investors. We start like I think the other panelists here, we start as early as it goes, if that's appropriate. We sometimes will invest in a couple of folks and their idea up through Series A and an occasional Series B, sort of dip our toes a little bit into mid-stage venture. We invest across the entire economy. As you think about, Anna, you asked about where's climate tech going. What's fun and challenging and just wonderful about it from the perspective of founders and potential operators and so forth is it's everything. I remember, I think it was the Bill Clinton's campaign sort of slogan was, "It's the economy, stupid." And I think that's climate tech. It's the economy. So that's what makes it pretty fun and interesting. So, we've got metals companies, mining companies, industrial heat, vehicle transport, air transport, food, agriculture, on and on, wind energy production, solar energy production, geothermal energy production, energy storage in the form of chemistry and in the form of heat and in the form of pressure in the ground. So, if there's a technology and a team of founders and operators that we think can have that sort of massive impact and know how to build and scale, then that's right in our target. Let's see, we typically, people always want to know check size. It really varies for probably all of us here, given the stage, but it can be pretty small up to tens of millions. And maybe that's an interesting topic. We could talk about how round sizes are just kind of going bananas in this environment. But I think I'll hand it over to Emily there.
Thanks, Matt. Great to be on the panel today. I'm an investor at the Wesley Group. A little bit on us. We've been investing, our firm's been investing for 14 years and was one of the first funds that popped up during the initial phase of investing in clean tech. We're now investing out of our fourth fund, and we focus on a number of verticals. We do a mix of mostly vertical and horizontal enterprise SaaS with a strong thesis around investing in energy and mobility and climate tech. So we're usually looking at energy, mobility, buildings, and property tech, industry 4.0, and we do a little bit of security. We are some of our notable portfolio companies that kind of illustrate some of these areas. We were early investors in Tesla, early investors in a company called SentinelOne that's now public cybersecurity company, investors in Planet, and then investors in Luminar, an automotive grade LiDAR company. So it sort of illustrates those different areas of interest. And we're usually investing in Series A and B companies, although we will kind of selectively come down and invest earlier, like I know a lot of firms will do. And our check size is usually anywhere from $5 to $15 million with some flexibility there. As far as, what we're seeing in this current phase of climate tech investing, I think some things that stand out in addition to what Paul said, the sheer amount of capital, especially the amount of growth stage capital that's coming into climate tech, but also the number of different and varied investment vehicles and types of financing for climate tech companies is really exciting, really differentiating. And, it felt like for so long in climate tech, the conversation was always about these valley of deaths. And while there certainly is still some truth to that, I think in this current climate, we are much better prepared. Companies, even capital intensive companies are much better prepared to move through those different phases of the companies with the types of investment vehicles and financing, as well as the amount of capital at that growth stage. Also, we saw in the kind of first 5 to 7 years investment in the power sector in, always have seen investments in decarbonization of mobility and buildings. I think there's been a really interesting shift towards this next generation of decarbonization, a lot of what Breakthrough is doing, Matt will probably talk about, which is decarbonization of industry and some of these harder to decarbonize sectors that are really going to move the needle. And you're seeing actually a lot of interest, at least from certain types of investors in some of those sort of next generation decarbonization opportunities. So yeah, I'll pause there.
It's fantastic. Thank you. It's great to hear more about each of your individual companies. So I want to remind everyone that you can ask questions. So use the Q&A. And we have already gotten a few questions that have come in. I've seen that a couple of them have been answered live, but I want to go ahead and have people put questions there. So with that, so there's two different threads I'd like to follow. One of them, you just mentioned this idea of decarbonization of industry, but I really want to hear about some startups that you're working with. So maybe there's startups that you're working with specifically in that space, or it's just a startup that each of you could talk about that's like a great example of something that you're working on right now. So who would like to start on that one? How about Paul? Do you want to go first?
Sure, we can keep it in order. So there's, maybe I'll just briefly mention two, because I think they illustrate maybe different aspects. One company I'm really excited about, which we led the seed round in a number of years ago and has really started to scale, is called Span.io. And the founder there was formerly the head of product for Tesla Powerwall. So he, been involved in launching that and running that product, their energy storage business. And through that, he saw this opportunity, which was that the electrical panel hadn't changed in decades, and yet it was becoming the hub of all of these new sources and uses of power. You think about electric vehicle charging, solar storage, and of course, smart home devices. And as we think about opportunities in the home and opportunities to electrify the home, it seemed like this was a really interesting sort of strategic hub to reinvent a product around. And so Arch and the team at Span have done just that, which is kind of reimagine what the panel can be as both a control as well as a sensing and data mechanism in the home. And we think that's really important for the next 10 years as homes electrify and more people get EVs. I'll just mention briefly one other kind of on a different spectrum. We're investors in a company called Climate Robotics. And this is, there's a lot of work going on in ag. I know we share this one with Shilpi and Irvin, and this company is really building a solution to generating biochar at a very effective cost by eliminating the transportation that has traditionally happened when you have to take biomass and transport it off to some centralized facility. It's meant that as a soil amendment, and so you think about, growers, farmers who are typically applying, agricultural lime to their land. Biochar is a very compelling alternative to that, but has always been too expensive. And by doing all of this on site, there's an opportunity to have not only a high quality soil amendment, but also a high resolution, high quality sequester of carbon, which they can generate a revenue stream from selling to folks who are buying carbon sequestration. So that's, another kind of example. I realize both of those are hardware, and we'll invest across, kind of synthetic biology through just business model innovations. But I think both illustrate a theme around electrification and a theme around carbon removal, which is another hot area in the venture world at the moment.
So let's I'm going to have Emily go next just so we break up the order.
Sure. Yeah. So one of my portfolio companies is a company called Circular that I think actually illustrates an interesting trend. The boost for industrial metals like lithium, cobalt, nickel, manganese, which are materials in batteries to fuel electrification, but also wind and other renewable energy technologies, is an area of enormous growth and demand. There's expected demand for these materials to grow significantly over the next 5 to 10 to 15 years. The issue is that extracting these materials is carbon intensive and also wrought with a whole host of human rights concerns, since they're mostly mined in areas like the Congo. And so we are sort of interested in what are opportunities around this increasing demand, but also ensuring that these materials are extracted more sustainably and in a more just way. And so Circular is an interesting company. They're a company that's doing supply chain traceability for industrials with complex supply chains, in this case from the mine through the manufacturing. They are mostly finding success in working in the battery metal space. So they're working with companies like BHP, Trafigura, Audi, Volvo, and Polestar to actually track the supply chains and point out risk in specific suppliers who are working in this battery metal space. They're working on plastics, textiles, tracing leather, a whole host of other areas, and then they're layering on, scope 1, 2, and 3 emissions. What's interesting is they're starting to get pulled into some of these commodity trading markets where they're saying, could we offer a premium commodity product in the market, so that if Volvo wants to ensure that their nickel is better than what's out there, they could sell a slightly higher priced premium green nickel product in the commodity markets. So it's kind of an interesting space that's sort of on the adjacent but also core to climate tech and renewable energy that we've been looking at. And this is a company that kind of illustrates one of those trends we're interested in.
So she'll be now.
Great, I wasn't sure. Yeah, I think this is a great list. I have loved working with climate robotics, so I'm glad Paul mentioned them. I think we do a lot of hardware, but one of our software companies that's doing quite well is a company called Cove Tool, that's helping with energy efficiency and building design. And they actually are tracking their carbon averted carbon emissions impact, and it's like 5x what Tesla does, in the way that they measure their impact. And so it's been a really amazing way to show that new building design in being able to give architects and developers the tools ahead of time to do the simulation and modeling of how each of these layers and each of these decisions can actually change the energy of the efficiency of the building. I think being in cities a lot, we think about buildings as like something that needs to be retrofitted, which is true. We have companies like Radiator Labs that are retrofitting the steam and systems in buildings to be more efficient, and Tro, or it's called Gradient now actually, which is an HVAC heat pump combined electrification tool. And so I think this combination of looking at how do we do retrofit to prevent such waste that's coming from legacy energy systems, but also how do we prevent in new build kind of making the same errors over and over again. One new statistic that I learned that's just kind of interesting is like 70% of the buildings that we're going to need already exist. And so, if we think about resource efficiency, or if we think about how industry is going to have to shift, especially in construction and real estate, I think there has to be not only these technical solutions, but also an awareness and acceptance that we have a lot of what we need. And so we need to kind of actually change the development mindset. And I think that's kind of the other side of some of these conversations is not just how do we alter and fix and make more efficient, but also what is the actual change factor that needs to happen to slow things down.
All right, I think that leaves me. So I'll first mention cement, being part of Breakthrough Energy Ventures, and Bill Gates is our chairman. If you read his book, one of his 5 questions to ask someone about if they're talking about climate change is what's their plan for cement, because it in and of itself is such a massive producer of greenhouse gas emissions. It's actually also, other than water, it's the material that humans make and move the most of all materials. And we've got several investments there. One that we recently announced, Brimstone, is taking a really interesting kind of, I would say, radically different approach to producing ordinary Portland cement, which could be not only close to carbon neutral, but maybe even carbon negative. So that's a neat one. I think, I forget which one of you mentioned mining. An exciting company there in our portfolio is Laloc Solutions, which has a better way to extract lithium from what were previously considered, or still are considered, lower grade lithium deposits, which we need a lot of lithium for all the energy storage, and extracting it from more areas at a lower price and being less environmentally destructive while doing so. It would be a pretty big win. And I think we also, this kind of question, Anna, led us in a little bit into HVAC. Cool company we have there. And some of these, it's so fun in climate tech where it's a boring subject, and some company does something that feels like magic. What is that, like Asimov's definition of, or I forget which sci-fi writer was the most advanced technologies feel like magic. So we have a company, AeroSeal, that has a technology that blows micron-sized polymers into the air in either air ducts or into buildings when they're pressurized. And due to the pressure, all the air is leaking out through all the little leaks, be they a pinhole leak or crack up to a ½ inch wide. And the polymer hits the edges of those gaps and sticks. And then the next one hits and sticks, and it seals it. So you could take either a retrofit building or a new building and get incredibly tight building envelopes. With standard construction, you can add this to the building envelope and take a building that was built with relatively normal good practices and turn it into a passive house envelope. And similarly with ducts, ducts in the US, according to the DOE, leak 20 to 25% of the energy. So a quarter of all that energy we're using for heating and cooling, we're blowing into the crawl space, the attic, the elevator shafts, places where people aren't. And this seems like a magic technology, so simple, and yet you can make those ducts incredibly tight with this technology. So, industrial solutions being applied all over the place in really neat ways.
So fascinating. Thank you all for talking about those companies. I particularly love the ones that are focused on the built environment, a hot area of interest. So for the next couple of questions, including some of the questions that are coming in from the audience, not everyone needs to answer. So I'm just going to sort of ask who wants to answer a particular question. And then if you have something to add, please do. So a question that's come in, that says for climate tech startups that will take 8 years for investors to get their payback, how much does that narrow the field for investors that we need to meet? So 8 years in terms of ROI, is that a problem? And who wants to speak to that one?
Not at all. I mean, I think even for tech companies these days, 8 years would be, right on the money, if not speedy. Companies like Airbnb took at least that long for investors to get a return.
Okay. So anyone else, 8 years, is that a problem? What's your
I think what we see is the companies that end up being kind of, and this is like also a function of the amount of growth capital that has come into the markets across all of technology and delayed IPOs, across all of tech, where you just see whether it's Airbnb, whether it's Palantir, whether it's even in this, in this sector, people like Tesla, QuantumScape, Rivian. I mean, all of these companies have been a decade plus in the making before they had a public offering. I think the reality is there's growth capital available to finance the pre-IPO stages, and the companies that take the longest time to build are often the most exciting ones. Like those are the ones that are gonna have the biggest impact, probably on the world, but also on an investor's portfolio. So I think as long as it's growing into a massive success, we're happy to work with teams throughout that period.
Okay. Next question is, how big of an impact do investors see blockchain bringing to the energy sector? So an example would be electricity markets of the future. Anyone? Blockchain question.
I have a prior life, and I think Filament, we were working on a secure energy stack, a secure stack for our IoT devices that was blockchain related. So I spent a bunch of time in 2014 to 2017 kind of talking through the implications of blockchain on industrial environments. I think that like the actual structure of decentralized systems there's a role to play, especially as we add a bunch of devices and digitize some of these environments to take those out of like cloud-based silos and allow for different types of exchanges of data and transactions between these ecosystems of devices and humans, and sort of switching up the business models in terms of like the direct application to like virtual power plants or certain ways of I think that the conversations that are happening in blockchain and like decentralized systems, mostly around like cryptocurrency today, are really like skipping over the implications of or like skipping over the benefits, I should say, I think, of what could be possible. I think there was a lot of interest in energy in like the 2015, 2017 era and like how it could happen, but I've seen very few like larger companies take the leap on implementing them. And so there's been like kind of a limited proof point on what the systems could be. And I think that has to do with a lot of like, as things are changing and trying to go through transitions, like doing things in a decentralized way is actually just harder to set up and build that ecosystem. But it's like trying to have the vision for it is, I think, an interesting component of what entrepreneurs have when they look at how the solutions can be built. And it's starting to like leak into the actual stack of development more so than being kind of the answer to the benefits and outcomes of a technology. That was a little vague, but yeah, that's my state on it, is that I think there's possibility, but I haven't seen a lot of momentum.
Yeah, I would just reiterate that there was a lot of enthusiasm for applications and like Shelby said, applications in energy using blockchain a few years back. A lot of that hasn't come to fruition. I would say we do see interesting companies where blockchain is a piece of what they're doing. It is like the underlying verification method, but it's not, we don't see a lot of, in all honesty, a lot of like super exciting kind of pure blockchain plays, at least at this point.
I think, yeah, I think I would just say, look, we view this as a new technology tool. Like this is like anything else. There'll be great companies that some of which are aimed at completely different areas and some of which are aimed at climate using blockchain. And we tend to be agnostic whether it's synthetic biology or computational biology and kind of those tool sets that all of a sudden are having an impact in agriculture and in new materials and in climate, or whether it's things like ML and AI, which have obviously massive implications in consumer businesses, but now are being pointed at things around product design and around climate challenges. And so I think that we would view this as just another tool in the toolbox. And we're always interested in kind of people who can wield that best to create something of value in climate.
Yeah, same.
All right. Next question. Can you talk about any interest that you have in liquid hydrogen? So the specific question is about Microsoft doing a hydrogen and fuel cell data center backup power plan.
I think I can speak to it. I think Matt and I actually overlap. One of the breakthrough fellows is one of our portfolio companies. It was called Origin Hydrogen, but now it's called Evol OH. I think that the application in backup power is actually quite interesting for hydrogen. So there's, as we were thinking about, I'm not an expert on hydrogen, but I'll just talk about this one company. I think when we were looking at it, there's a lot of hope for hydrogen, in transportation and sort of being a replacement for a lot of the fossil fuel based industries. But there are some earlier applications that require less in terms of infrastructure and big change for like across a legacy system. And so I think one of those is backup power and also like off-grid vehicles. So like mining equipment and different types of smaller like forklifts and smaller systems that don't have as easy access to grid. And so I think trying to use liquid hydrogen as a solution, like the electrolyzer that this company has developed, it needs to be cost competitive with like generators, right? Or it needs to be cost competitive with other systems that are backup power solutions. And like, it needs to have similar capabilities as batteries, but have the resiliency, like the actual features that the system needs to deliver are not that of like, what needs to be true for it to replace like cars, right? For example. And so we were able to sort of make a bet on this team around their electrolyzer technology because of the components that were required and kind of belief that the team was going to be able to bring it to commercialization for some of these use cases. And there was a big enough opportunity there that hydrogen didn't need to cross this threshold. And so I think the decisions that Microsoft's making echo what I've seen, especially outside of the US, in places where there are more off-grid environments that need power in an industrial setting. So that's one investment we've made in the space. I've looked at it more than a few times and not made investments, in terms of like utility scale hydrogen or, transportation network scale. But I think the backup power use case is really something that I have hope for in the next 10 years.
We've got a number of investments in hydrogen, so I'd say we're reasonably bullish on it. We've got several in hydrogen production, with various different approaches, and one in hydrogen use, which is Zero Avia, using hydrogen for regional flights. We think our thesis here is we think some great electrolyzer and other technologies are going to push the cost of hydrogen really low, probably faster than people think. Even though people now, like the latest Bloomberg NEF hydrogen forecasts are sub $2 by the latter part of this decade. So they're starting to get pretty aggressive on those targets too. But I think if we can make zero carbon hydrogen for $1.50 a kilogram, there's going to be a lot of cool uses for hydrogen. I think a lot of those, will be in industrial applications, maybe heavy duty ground transport, maybe like some of these backup applications. We don't see it happening in light duty vehicles. I think batteries have won that game for sure. But industrial uses like steel production, potentially fertilizer production, and air transport, where we just think it's going to be a very, very long time before batteries can fly larger planes, regional distances. Although we do think batteries will also play a role in flight as well.
Yeah, and I would say we have a very similar view on hydrogen use cases that Matt does. What's interesting though is there's been sort of waves of enthusiasm around hydrogen in various periods, and so we are now in this like renewed interest in hydrogen. Just a random anecdote, we have a number of corporate LPs like Audi, Bridgestone, big utilities like Duke, AEP, Dominion, industrials at like AEB, and universally every single company is asking us what's going on with hydrogen, across all these sectors. And it's for good reason, because there are things that are sort of fundamentally different about this new wave of enthusiasm in hydrogen that were just not there, in previous periods. But I think Matt's point around, we need hydrogen to decarbonize certain industries, but there are use cases where it makes more sense than others. And that's, and then there's just a real question on timing and inflection point for when we do start to see those cost down curves and that actual, demand for hydrogen in those use cases. And I think we might take a more conservative view around when when we'll see that happen, which is probably, depending on the use case, a decade out.
Well, I can't believe how time is flying here. I want to ask a couple of questions, and thank you so much for all of the questions that are coming in. We're not going to be able to get to every single one of them, but I do have a question that kind of brings us back out a little bit further. Can you tell me a little bit about what you're looking for companies? Because I know it's kind of different for each of you. You're all early in. But how has company building changed in the past 10 years? I think that's going to be, I guess what I'm trying to get at is, what are you looking for and how is that different from something you might have been looking for in the past?
Yeah, I think we're always driven by the team, by the people. I mean, we're investing pre-revenue, oftentimes pre-product. So you typically don't have any metrics. And so what we're anchoring on is enough understanding and intuition about a market, and then a belief in a team that we meet. And what we're trying to understand as we kind of get to know that team is, what's the unique experience that has led them to this insight or innovation? So that founder market fit question. And it's just some basic characteristics about how quickly can they grow, can they compound themselves, and potentially be people who take something that's a core kind of technical idea and commercialize it and grow into leaders of a fast growth startup. Can they attract people? Can they attract capital? Can they attract customers? Do they have clarity in terms of the product they're trying to build? And are they transparent and realistic about the challenges that they may face or what they don't know? And can they iterate and learn quickly, right? So there's just a broad set of things that we're trying to understand about the teams that we're backing. And in terms of what's changed, I think this is a vastly different period than a decade ago, because the resources and the building blocks of a company are far more abundant now. So in terms of building blocks, I mean capital. I also mean people, engineering talent, product talent, go-to-market talent, people who want to do something around climate, so you can build teams far more easily. And then the last part of it is, I think that, just where we are in terms of an urgency to address climate and the broad consensus, whether it's, someone like BlackRock who's making pronouncements around, kind of corporate actions in climate, to consumer expectations, to the pure economics of adopting more climate friendly, renewable solutions. You're just seeing a lot of the pieces coming together in a way for a founder today that were not there a decade ago.
Yeah, from my perspective, I think Paul nailed a lot of things. We look at team. We also certainly think about the market. Is this a market that we think could be huge? And it doesn't have to be the initial product, but do we see a path towards that, the product and the vision of the company expanding into what could be a massive market? And that's, both from a does it matter perspective from a returns and from the founder and the team's effort, and also from the greenhouse gas perspective. We've got to see a path to that 0.5 gigaton. And then, the third thing that I think I'll always think about real quick is just a differentiated approach. Is this team bringing something new to how they're thinking about it? Echo what Paul said about just the amount of resource that's available, fundamental technology innovation that's happened over the last 10 or 20 years, and the amount of people and money is everything just can go so much faster than it used to go.
I guess that's the good news, that it can go a lot faster. So as a university, I do want to ask one question before I'm going to ask you for your final thoughts, because I want to make sure that we get like one good piece of knowledge from each of you before we leave, something that you're going to leave us with. So it turns out that 4 of us actually went to Duke University, which is awesome. But at Carnegie Mellon, we have a number of students who are entrepreneurs. So can you talk a little bit about what students should be thinking about now if they're thinking about starting a company? I'd love to hear that. Like and maybe that is your last nugget. We could make it university focused here at the end. Shilpi, how about, there you go.
Yeah, I'll think about it. I started a company in college and out of like one of the research labs that I was in, and it kind of showed me that there's this like alternative way. I think what I wish I had done though, is I think it put me back into the startup sector very quickly. One of the things I see in founders is like an actual like knowledge and understanding of how things work today. I don't think it's like you have to do 20 years or 30 years or 50 years in an industry to know it, but like actually being embedded even for 2 or 3 years in the way an organization, like a utility works, or in the way decisions are made in a boardroom for a public company, like it actually really does help to have perspective on how the world works today, and the like 99% of the economy that isn't a startup and isn't related to technology. So I think that people who are really entrepreneurial minded are really driven towards the cultures where like so much is moving and happening. But in climate solutions, there's just so much other knowledge required outside of like how to build a tech product. There's so much other perspective. And so I think one way to do it is to work in it. And I think the other one is to be curious and to like use the resources of alumni networks in the university, and the town that you're in, and like the position you're in, to be a student of how the world works. And like that's actually, I think the founders that are most passionate are the ones who've like looked at those industries and been like, really, like, is this how it has to be? And like seen the opportunities for change within them.
Yeah, I would say something similar, which is once you get out of school and get out there and have experiences. And it could be that you commit to a job for 2 to 5 years. It could be also that you just look to have different internships while you're in school to see for 2 to 3 months different proof points, perspectives, experiences, industries. I think sometimes when you're in school, there's this feeling like you have to know what you want to do with your life. But really, a lot of your the first decade of your career is having experiences and figuring out learning, but also what you like and what you don't like and what you're good at, and really trying to orient that next 10 years towards that next phase. I'm a point in case of that, in that I spent the first decade of my career in politics, and then I'm now working in tech and venture. And so, I would just recommend getting out there and trying to have as many meaningful experiences as possible.
Yeah, those are, I think, really great comments. One thing I would add is, you also don't get stuck on the like Ayn Rand myth of Howard Rourke doing it all by themselves. Most great companies are not that way. So if you're a potential founder and you've got a great idea but don't know how utilities work or whatever it is, go find your co-founders that do, and build a team. And one person can bring the technical expertise and the new idea, and another person can bring the market understanding and knowledge. And Paul used the word founder market fit, and I really think about that as the team. What's the co-founder and the broader group here? What's their market fit? So build that team.
Yeah, I'll really pick up on what Matt said, and it was dovetails with what I was going to offer, which is, I think one of the things we see a lot of founders, first-time founders in particular, whether they're at university or after university, do is be very protective and very wedded to an idea. And there may be something very special in that kernel and that first insight, but I can hardly think of a single large-scale success that looks very similar to the way it did with that first technical kind of insight or innovation. It's going to grow, it's going to evolve, it may completely branch in a different direction. And the only way you get there is by thinking of what you're doing is building a learning machine as an organization. And so view every opportunity. You need to be thoughtful about, there may be some things you can't share the deep technical details of with everyone, but you should in general be open to exposing other people to the idea and using every interaction as a chance to get feedback and learn and tune and hone and continue to adapt and build a team that has that culture around you. Because the only way you're going to get to massive scale is by continuing to take that insight and just building around it and course correcting as you go.
Yep. So at first I had said, let's talk universities and then let's do insights, but you guys all gave us the insights. Do you have like one more? If you don't, that's fine, because some of you just gave us your best insights. I really love what you said. Any final thoughts that we haven't covered so far? I mean, if you have that note of wisdom, I want to make sure we get it. So everybody's left it on the table. Thank you all so much for being with us today. We really appreciate all of you that are here in the audience. Great questions that came in. I'm sorry that we could not get to all of them. So many great questions about technologies. And the important thing, I think, for all of us to remember is that we're all in this. There's so much work to be done. Climate tech is an important aspect. I love what you're talking about with building those teams. You don't have to be technical. It takes all of us. And so I've been hearing that a lot, particularly with COP26 and sort of thinking about what the future looks like. I think there's a place for everyone in that market. So thank you all so much for being here today. I really appreciate it. For those of you on the line, thank you for joining us for this almost hour this morning. And I hope to see you on December 16th at 9 a.m. when we focus on electrification. So with that, thanks to all of our speakers today. I really appreciate it and have a great rest of your day. Thanks, everybody.
Thank you.